Investors, welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and we are here for Wednesday's daily talk of stock. And the market's providing us a nice green bullish day. This was awesome to see, and this continues the rally. So just as this reads right here, stocks moved higher once again today, notching the best 4-day streak since May, heading into the Thanksgiving holiday. And this is exactly why on this channel we have been talking about how we are buying the dip and remaining bullish on the markets, because recently there has been a ton of pressure in the markets, but this also provides a ton of great buying opportunities, which right now we have most recently seen. When we look at the major indexes, I have the SPY on the left, and then on the right I have the triple Qs. As we can see, we had another nice green day today, and we are higher than we have been in recent weeks. So recently we have been in this descending pattern with this level of resistance. We have seen some lower highs created, but today we did break out of that level, and it does appear that we may be moving back up towards the upside. When we do look at the indicators on the relative strength index and on the MACD, it does appear on the MACD that we may be seeing a bullish cross. And myself, I am very bullish on the markets, and I do expect for them to go a lot higher, because when we do talk about the macros, everything is looking super positive right now when it comes to tariffs, inflation, and then also the Federal Reserve, arguably the biggest factor for the markets. And as we know, the Fed is going to soon be turning on the money printer. They are going to be ending the reduction of asset purchases on December 1st. So going into full-blown QE here in the near future. Right now, there is an 84% projection that the Fed does cut at that December 10th meeting, and I do believe that they will do so. So we have the Fed blackout period starting on Saturday. That is where the Fed can no longer say anything about monetary policy. So it's going to be interesting to see on Friday if the Fed does push up these rates by saying something dovish and we get closer to that 100%. But it's looking more and more guaranteed every single day. And with this strong market rally that we have seen over the last 4 trading sessions, I'm sure a lot feel better, because I'm sure many were not looking forward to being at the table this Thanksgiving after they've told everybody all about their investments. Just to bring a little bit of humor here, I love this meme there. There's Mr. Investor. How are your little coins doing? Are you a millionaire yet? Well, things recently have felt pretty devastating, but if you've been buying the dips, you've probably seen some great return on investment thus far over these last 4 days. So what I would say at this dinner table is, yeah, they're doing fantastic. We are at all the major levels of support right now, and I bought the dip. I see the markets at a discount, and I am very excited about what the Federal Reserve is doing and what we should be seeing going forward. With that being said, now we're going to talk about a bunch of different assets that we love on this channel. We're going to start out here with one of my favorites, and that is TQQQ, the triple leveraged triple Qs. And recently, of course, there has been a lot of bleeding within the markets. Everything has fallen, but the major index is not getting hit as hard as many individual stocks. And that is why I love this play of TQQQs, because this is the triple leveraged NASDAQ. And despite having a drop, and despite this being 3x leveraged, the NASDAQ is relatively safe. And I have a lot of faith in the Qs, because I have a lot of faith in both the SPY and the Qs, because they are the benchmark for success. And if the markets are going to push forward, well, of course, the major indexes are going to push forward with the markets. And so I like this triple leveraged play because it provides triple leverage on your cash. And so I put this here on this whiteboard. Let me pull this up here, because there's a lot of talk recently about leverage and how many investors are saying not to over leverage. And I do agree with that, but I think some just look at leverage as margin or borrowing power, but we can have leverage on these assets. And this is what I love. So this is what I drew here. So Typically, I think when a lot of people think of leverage, they only think of their cash. So the green is the cash, the black here being the leverage. And what they will do a lot of the times is they will stack. So they will stack that leverage on top of that cash, which creates this position where the green uptick, the strength, if things are bullish, it could be great, but also it creates an environment where that red downtick is even more severe, because when the blood does come, you are losing not only on that leverage position, on that margin, on that borrowed equity, but also you're seeing more significant movements against your cash. What I am always looking for in the markets is an edge, something that gives me advantage. And I love what these leveraged positions provide, because essentially what they are doing is, instead of you having to stack your leverage, you are combining it for a synthetic play, a derivative. So you are taking your cash and combining it with leverage. What I love about this, I have it here on this little chart. We can see this is cash, this is leverage with a tremendous amount of leverage. It could provide a great return on investment, a true asymmetrical return on investment, but the bleeding isn't too bad if it goes the wrong way. And so I've been playing with TQQQ with the options contracts. The return on investment is tremendous. And with options, they also provide extra leverage on top of the leverage. And I'm willing to stomach this because the Q's, again, very safe. And I see this as the benchmark for success when it comes to the markets. And I want you guys to hear this, because I was talking to ChatGPT the other day, one of my best friends when it comes to investing. If you don't talk to ChatGPT, I definitely suggest doing so, because we live in a great time period where we have so many tools right in our disposal, and ChatGPT, one of the strongest investors out there. So the other day I asked about TQQQ. I'll let ChatGPT say it itself, but this is why I love the triple leveraged triple Qs. Hey, Chat, how you doing?
Hey, Trevor. I'm doing great.
Hey, so can you please tell me again what you said the other day about TQQQ leverage and how it stacks? Can you talk about some options contracts that go all the way out to 2027 and the type of leverage that provides?
Absolutely. So just to recap what we talked about before, when you're dealing with something like TQQQ, you're already looking at a triple leveraged ETF. That means for every 1% the underlying index moves, TQQQ is aiming to move about 3%. Now, when you add an options contract on top of that, and you're going out all the way to something like 2027, you're basically stacking leverage on leverage. So the option itself gives you that extra exposure to price movements without owning the shares outright. And because TQQQ itself is leveraged, any movement is amplified. In other words, an options contract on TQQQ going out a few years is basically a super leveraged bet. It's like leverage on top of leverage, which can mean bigger gains if things go your way, but also bigger risks if they don't. So you're essentially getting a kind of amplified exposure that grows over time.
So something that Chat didn't say right there, but it said the other day, is you have about 10x leverage. And again, that is leverage on your underlying cash. So many look at leverage as just stacking their leverage on top of their cash. But with TQQQ, we have a synthetic play. We have a derivative here that provides leverage on your underlying cash. I love the triple leverage, triple Qs. Every 1% in QQQ is 3% in TQQQ. If you go into the options market, even greater return on investment as long as you play it correctly. I made a video a while back about options contracts and how I use options to provide myself with return on investment that is over 100% so many times. If you haven't seen that video, check it out above and you could get kind of an insight on how I think about the options market. But I love everything we are seeing. I am very faithful in the underlying markets, so I have a lot of faith that the markets will continue to bounce up. The bears recently have been very loud, but I feel we are seeing a sentiment shift. And again, this is just on the major Qs. Well, this is TQQQ, but it does appear that we are finally breaking out of this downtrend. And again, things look very positive right now. You love having amplified movements, but you don't want to stomach volatility on some of these other plays that maybe haven't proven themselves yet. You know, a lot of these AI plays or these pre-revenue plays. Well, I think TQQQ, a tremendous opportunity. Also, they just had a stock split 2-for-1. So previously, the triple leverage triple Qs would be worth over $100 right now. But with that split, it makes things more affordable, which again, I really love for the options market. Now to get into our next play, this is one of my favorite plays. This is a play I am investing into for the long term. I have a long-term holding on Robinhood. So the short-term movements doesn't matter to me too much because I have been stacking into Robinhood and I am holding this play for many years to come. And with Robinhood recently, we have been kicked down significantly on the relative strength index and on the MACD, but we are pushing up on the RSI, and it does appear that we may be seeing a bullish cross here on the MACD very soon. We did see this big bounce up today with Robinhood. This play is a true blue chip company. They have accelerating revenue. Robinhood is innovating so much. They are bringing shorting to their platform. They are bringing a whole social media to their platform. Basically, they are bringing Cortex AI to their platform. This company is constantly innovating. I use the Robinhood credit card and I really love it. 3% cash back on all your purchases. And so Robinhood making it easy to have it as the all-in-one finance platform. You could use it as your brokerage. You could use it as a savings account. You could use Robinhood credit card. And I just love the Robinhood platform altogether. I like where we're currently at. Again, breaking out of this downtrend that we have seen. This is a high beta play. So Robinhood has a beta of about 2, which just means it runs at about double the speed as the normal markets. And so Robinhood, this play, I am very bullish on. I do believe that we will return back to this trend that we have been seeing through most of the year with a rising support and rising resistance. We did maintain in that trend basically since April until we recently got bucked out. But again, things are looking very bullish right now. A strong day within Robinhood going up 11%. There is not enough good things I could say about Robinhood. A true long-term investment for me. And Robinhood is also buying back Robinhood stock. So right now there is a Robinhood buyback program going on, which means the shares outstanding are constantly going lower. So there's a lot of value within Robinhood, and we are seeing that float decrease while revenue and everything else in the business is increasing and getting better. So I want to get my hands on Robinhood while it is still relatively cheap at $128 because this company has a lot further to go. And if you think about what recently has happened with the markets, all the fear, uncertainty, doubt, panic, all the selling going on, this has been tremendous for Robinhood because they have collected so much money when it comes to order flow and on all the commissions with options contracts, with the crypto, everything like that. And now look, everybody is buying back once again. Another positive for Robinhood. They are making the paper in the equity markets. So I love Robinhood talking about leveraged positions. If you are looking for a momentum play, we have ROBN, which is the double leveraged opportunity for Robinhood. I also do play in Robinhood and I use ROBN as a way to make some short-term profits while holding my hood for the long term. So currently at $76, this play was all the way above 100 before the recent retraction that we have seen. Now, the next sector that we're going to talk about is all around quantum. We're going to talk about QBTS, QUBT, just the entire quantum sector, which recently has been hit very hard. And the bears love to look at all these risk assets and talk shit when everything is down because they're like, oh my gosh, you have fallen from, 40, 50% from the highs that were most recent, right? Oh my God, this asset is nothing. These risk assets, this happens every time. But then they choose to ignore the massive run up that we saw leading up to the recent retraction. So we had about a 3,000% jump just this year alone in QBTS, and the entire quantum sector having a ton of volatility towards the upside. With the recent retraction that we have seen, this is not new for quantum plays. We saw a massive drop like this to start the year where everything fell by about 50%. So where I have this highlighted in the red red is when we saw those scary days with quantum. That was in January. If you were there for then, you remember it was because of the NVIDIA CEO saying some things that didn't necessarily appear bullish for quantum. There was this hard retraction, but then so much recovery and so much run up after that moment. So right now we are in a spot where we have fallen significantly on the candlestick chart. When we look at this play as layers throughout the year, we have fallen through many layers of support and resistance. We are currently low on the relative strength index, and it does appear that we may be seeing a bullish cross here very soon. And with the recent market sell-off that we have seen, it has been very harsh in so many plays, but nothing of the underlying with these companies has changed. I still heavily believe in quantum robotics technology and the future that we are going into, which is centered all around AI. And so with this recent retraction that we have seen in QBTS, just like the movements that we are seeing in a lot of the market right now, the snapback can be very volatile and quick. So QBTS, I have my eyes on. I am also looking at QUBT. I believe that both of these plays are sitting at a great buying opportunity. In QBIT, we are now currently under the 200-day moving average. We are low on the relative strength index. And then it does appear that we just saw a bullish cross on the MACD, and QBIT recently did have their earnings and things were very positive. This company out here has a chip foundry out here in Tempe, Arizona. We have talked a lot about QBIT because we believe in the future of this company. And in just the last earnings report, they talked about all the cash on their balance sheet and how their revenue will be accelerating here in the future. So 2026 should be a much better year for QBIT when it comes to revenue and all these quantum plays, because the reason why quantum has gained so much value this last year is because investors are catching on to what is happening. And in the last 20 years, we've seen a lot of research and development with quantum. You know, there wasn't really a lot of revenue to be made. A lot of these companies just hadn't actually developed their quantum computers just yet. But now these quantum computers are actually being used in real life by a ton of massive corporations. Our favorite quantum play, QBTS, you know, their bookings are up 500% year over year. So a very volatile play. And I love to pick up these volatile stocks. I love to make my investments when the fear is high and when we are low, because again, we've had a 50% retraction from these highs from 46. We are at 22. I was bullish on QBTS in the 40s, and I am still bullish in the 20s, even more bullish. And again, talking about leverage, another great leverage opportunity that could provide crazy return on investment. This actually had provided me 400% ROI on this jump up the first time, and I was able to take some profits here. QBTX, the double leveraged opportunity of QBTS. So every 1% that QBTS goes up, QBTX goes up by 2%. And again, when we look at all the technical indicators, we are sitting at some very favorable positions. And when we talk about the macros, we are very excited because of what we believe the Federal Reserve is about to do, which is go into a much larger cycle of quantitative easing, which is going to be tremendous for all risk assets, all AI assets, technology, crypto, and of course, quantum. So very excited about this sector. Now a little bit about robotics. Rich Tech Robotics recently had a pretty rough sell-off, but as we could see, it does appear that we are starting to flatten out here just a bit, and we may be finally breaking out of this downtrend, especially again with the macros looking a bit more positive. So we just had this bounce off this 200-day moving average. We had a bounce off this low on the relative strength index, and then it does appear that we may be seeing a bullish cross here on this play also. I like Rich Tech Robotics because this is a robotics company out in Las Vegas, Nevada. They recently just had a partnership announced with the Las Vegas Knights, and so their robots are going to be in the NHL Stadium. This is very interesting, and we really are going into the society all around these technologies, and I feel that the robotics era is just beginning. We recently saw the introduction of that Neo robot, which is a humanoid robot. We also know there's a lot around Tesla Optimus. And when it comes to food delivery service, we have Serve Robotics. We also have Waymo, which is a self-driving car. With Rich Tech Robotics being out in Las Vegas, Nevada, just announcing this partnership with the Las Vegas Knights, you may see a lot more of Rich Tech in the years to come. So I'm very excited about this play. I love where we are currently sitting at when it comes to technical analysis at a price of just $3.50. I am a long-term holder on this play. I have some options contracts that are Leaps options contracts going out to 2027. So I do believe that this next year is going to be a big year with robotics. Now, our next play, which is another small cap stock, Big Bear AI. Big Bear right now, I love what we are seeing because we are riding right at this 200-day moving average, and I'm seeing a lot of strength in Big Bear because recently with the hard market sell-off that we have seen a lot of plays absolutely get shot, but Big Bear still sitting at this strong support level. This is awesome to see because Big Bear this year has been very volatile, and when we just look back at February, we were all the way up to $10 and we fell all the way back to under $4. So we were at the $3 mark with Big Bear for some time there, but we see that things aren't as volatile now, at least at this current moment, because we have had a sell-off from this level of resistance. But again, we didn't absolutely collapse, and we are still right at this level of support. So Big Bear has been consolidating basically since this gap up in June. But we are right at this level of consolidation, right at the level of support, which is also right with the 200-day moving average. We are right at the middle on the relative strength index, and we could see on the MACD right now still at an undecided spot, but I believe we will be seeing a bullish move up here in the very near future as long as the markets continue to stay positive like they are. So Big Bear, one of my long-term holds. I really love this play, especially with options. Again, just like I was talking about earlier in the video about TQQQ and options on that. If you haven't checked out that video, go check it out because that video is actually all about Big Bear AI options and a lot of wealth to be made in these small market cap stocks with low prices. Again, $6, relatively cheap, especially for all the true value, which is in Big Bear AI. Now to our last stock of the day, DJT, Trump Media and Technology Group. Right now, we have actually seen a couple bullish days in a row with DJT, which is nice to see. We are still at a very low spot. We are very low on the relative strength index, and on the MACD, it does appear that we may be seeing a bullish cross here very soon. And with DJT, this play is heavily correlated with crypto. They have a lot of crypto ETFs coming out in the near future. They also have a massive reserve within Bitcoin, and we have talked many times about all the big money which is in DJT. A lot of big funds invested into Trump Media and Technology Group, and also a lot of politicians with the Trump family holding a massive stake within this company. So I am very bullish on DJT despite the retractions that we have most recently seen, and with the entire market waking up and with the Federal Reserve forcing the markets to wake up with their quantitative easing that they are about to implement in full force. I do believe this is going to be tremendous for all crypto assets, and DJT, again, a play that is heavily correlated with crypto. So I love all the assets that we talked about today, and the reason why I love investing into so many assets, let me go back to the whiteboard here. Something I love with investing, and the reason why I diversify is, if you think about it, I'm going to draw here. Let's see, we talked about 7 different investments here. So I'm going to draw 7 different circles here. 1, 2, 3, 4, 5, 6, 7. Let's say on these 7 investments. And the reason why I love leverage and options contracts and all that, because they could provide asymmetrical return on investment. So let's say out of the 7 that we talked about today, one just slightly goes up, right? Let's say another goes up a little bit more. Let's Let's say one just goes flat. Let's say two goes flat. Let's say one loses in value, right? Well, with the sector that we are in, a lot of these plays could run like crazy. So now let's say one has an asymmetrical return on investment, and maybe even the next is a dud. I am looking for those asymmetrical return on investments, things that could run great and provide me with 100% return on investment or even greater. It's so funny. Many years ago, I had a friend that was always talking about that. Oh, I'll only invest into something if it could provide a 2x or a 10x. And I thought he was crazy when he initially said that. But as soon as I started investing more with leverage and I started investing into these options contracts, I totally agree with his sense, because at the end of the day, all of us only have so much time. Time is finite, and I'm trying to make the greatest return on investment with my time so I could spend the bulk of my time doing what I love. Just like tomorrow, it's going to be Thanksgiving. So I hope everybody here who is watching has a wonderful Thanksgiving. I am so thankful for every single one of you who come to my videos. As always, I really enjoy doing this, and this year has been tremendous. So I thank all of you for being here. As always, I hope you all have a blessed holiday. If you are doing traveling, be safe. Otherwise, I would love to hear everything you guys have to say in the comment section below. So please drop a comment. Please let me know what you think of all the assets I talked about today. If there are any assets that you are looking at, if you are bullish or bearish. Also, please leave a like and please subscribe to the channel if you haven't already done so. I thank you all so much for being here, and I will see you in the next daily talk of stock. Happy Thanksgiving.